when a currency is no longer able to, like a government is no longer have enough power to manage its own ledger, it gets kind of forcibly dollarized. So whether it's Argentina or Lebanon to varying degrees, people start protecting themselves by gravitating towards other monies. Now the question is, what happens when the U.S. and Europe and Japan? What happens when these major currency blocks themselves have fiscal spirals? Right now, I think what this technology does is it gives people more choice around the world. It kind of breaks these monopolies, allows the more global competition of money again.
Alden is a renowned financial and macro analyst, investment strategist, and relentless Bitcoin enthusiast. Amidst all the enthusiasm and optimism regarding the possible approval of the spot Bitcoin exchange-traded fund, Alden recently discussed an even bigger and more bullish topic: more widespread global adoption of Bitcoin and some other cryptocurrencies. During a recent interview with the Bankless podcast, Alden explains an urgent situation that seems to have been temporarily kicked out of the spotlight by all the ETF excitement. Alden shines focus on the extremely worrying and gradual decline of the global fiat monetary system, which according to her is still only limited to emerging markets but will soon quickly spread to major economies like the United States. During the interview, Alden examines the rapid and continuous economic decay in the United States and how it's about to get much worse in the coming months. According to the financial analyst, there is a very high chance that the U.S. is heading for a pronounced recession that will severely impact every sector of the economy. However, Alden believes the more critical challenge to the U.S. economy is inflation and monetary debasement. Alden acknowledges that the U.S. is now in a debt spiral and the only way to save the situation is to print more money. But this is a challenge in itself because money printing got us here to begin with, and though it might provide a temporary solution, it will only cause bigger problems. Yet the only other alternatives, increasing the government's revenue or enforcing an austerity program, will be next to impossible to implement in the United States. Alden further explains that with the constant and rapid debasement of fiat currencies, the globe's 8 billion population, especially the working class, will have no choice but to turn to crypto to protect their wealth. This means more widespread adoption of cryptocurrencies like Bitcoin and subsequently, massive price increases and rapid development of the crypto industry. We will now bring you clips from Alden's interview. Please watch, share, and like this video. Also ensure you subscribe to the channel and turn on post notifications for more videos like this. Thanks and enjoy the video.
So as we encounter the global financial crisis, and then as we encountered the 2020s, COVID crisis, fiscal crisis, I do think we're entering the later phases of this current era. I don't think it's going to end next year. I think it's network effects generally take a long time to be competed with, but I think we're entering that now. I think there's more geopolitical alignment against that. They still have their headwinds, but there's more adamant pressure to do something about it. And then two, these newer technologies have enabled new ways to go around it, or ironically, new ways to extend it. And so I would say that digitally native money is both good for the dollar and bad for the dollar, depending on what time frame you look at. So the invention of Bitcoin is basically the invention of fast digital settlement. So it's saying, okay, for centuries, we keep making money faster by centralizing it and making it more efficient that way. Well, here's a way to have a shared ledger that's decentralized, right? That's basically the invention of Bitcoin and related technologies. And so one of the capabilities that has is that as these digitally native monies grow in awareness and adoption and size and liquidity and better technology, they can pierce these 160 different currency bubbles in a way that prior types of money cannot. So for example, if you were in Argentina and you want dollars, it's hard for you to get your hands on dollars because Argentinian can kind of block, they can control dollars flowing in and out of the airport. They can tell banks what they can or cannot do with dollars. And so, getting a dollar on the street, you're going to pay a lot more for it because it's very hard to get. They're very scarce. Same thing for many other countries. Whereas, say, stable coins can pierce in there more readily digitally than physical dollars can. And so on one hand, you have, like, for example, BRICS countries and other things trying to de-dollarize in a way. From the top down, but from the bottom up, when you ask people on the street, what currency do you want? They generally want dollars. They don't want Chinese yuan. They don't want Indian rupees. They generally want dollars. That's the even in those like street markets, black markets, gray markets, the most liquid saleable outside currency tends to be the dollar, at least in most countries. And so tokenizing assets like the dollar or like the T-bill, for example, is a way to push that into these countries and where there is a strong, natural, organic, bottom-up demand for it, for lack of anything better. They might hold gold, but they also want dollars, for example. And so these technologies that kind of perforate, they break the borders, the financial borders that countries have been able to build around themselves. My expectation is that those are going to keep being frayed. Those are going to keep weakening over time as long as this technology keeps getting better and people get more and more awareness of it. And so I think this current era of like 160 different local currency monopoly bubbles is increasingly untenable. And what you generally see is when a currency is no longer able to, like a government is no longer have enough power to manage its own ledger, it gets kind of forcibly dollarized. So whether it's Argentina or Lebanon to varying degrees, people start protecting themselves by gravitating towards other monies.
The problem of currency debasement is currently more debilitating in emerging economies, but Alden reckons it's only a matter of time before it spreads around the globe. Several emerging countries around the globe, from Nigeria to Egypt, Lebanon, Argentina, Sri Lanka, and Zimbabwe, are battling crippling levels of inflation and an unbelievable rate of currency debasement. For example, the Nigerian naira was trading at less than 200 naira to a dollar just 8 years ago. Today, it is over 780 naira to a dollar. In addition, the African country is facing one of its worst levels of inflation in more than 2 decades. Egypt has had to devalue its currency twice this year alone and is preparing for another round of currency debasement. Yet citizens are grappling with an over 30% increase in the prices of goods and services. According to Alden, this could be the reality of many developed countries in only a matter of years as long as governments keep printing indiscriminately. By the time that happens, Alden envisions that the currencies that are already at that point today would have been completely wiped out. Let's get back to the interview as the macro analyst discusses some of the early signs that this could be the reality of America and other developed nations in a few years, and the importance of cryptocurrencies in the new era.
So even those systems are not stable. As the United States digs itself deeper and deeper into a negative net international investment position, as our public debt as a percentage of GDP keeps increasing. And, one thing to consider is that for like 40 years, the United States was increasing its debt to GDP. So we went from 30% debt to GDP up to 120% debt to GDP from, say, the end of the 1970s until the beginning of the 2020s. But that was actually somewhat sustainable because interest rates kept falling. And so if interest rates fall from 20% to zero, you can increase your debt without increasing your interest expense, at least relative to your income, relative to your GDP, relative to your tax revenue, however you want to define it. But the instability of that system starts to reveal itself once you get down to zero interest rates, bounce along that for a while, and then start to increase from there again, right? Because there's no longer an interest rate offset to the rising debt. And so now interest expense in a lot of these countries is starting to become a major problem. And central banks can lose control of the rate of new money supply growth because all of their tools are designed to slow down bank lending. They're not designed to slow down large government deficits and interest expense. And so as the bigger currencies become unstable, I mean, that's where we go through the looking glass. That's the future. Like what's going to win? What's going to outcompete the dollar? Is there a Bitcoin future in our, is there like an orange future in our path? I know you guys would probably say another currency, Ethereum, but whatever the case may be, right now I think what this technology does is it gives people more choice around the world. It kind of breaks these monopolies, allows the more global competition of money again. In the near term, that can ironically be good for the dollar because it allows dollars to enter these jurisdictions more readily. But in the long run, as the dollar itself becomes unstable, you have scarce bare assets that are basically digital gold, digital money, scarce money in a digital age. The weaker currencies are going to increasingly face dollarization pressure because now they not only face it from physical dollars, they face it from stable coins. At the same time, the major ledgers, including the dollar, I think are going to take on some emerging market characteristics. But what I mean by that is that as debt as a percentage of GDP keeps increasing, as these countries run structural trade deficits and enough political polarization to prevent any sort of realistic way to reduce those deficits or fix those deficits, and as you no longer have the offset from declining interest rates and globalization. So part of why interest rates were able to go down for 40 years is that that was also the era of globalization. So China opened up to the world starting in the 80s and especially the 90s. The Soviet Union fell in the early 90s. And so basically what we did was we brought Western capital and Eastern labor together. And that was a kind of a renaissance of production, of keeping costs down, of synergies. It was a very disinflationary force. Some people benefited from it, some people were hurt by it, but it was enabled prices to go down, disinflation to go down, interest rates to go down. That era seems to be behind us now. We've already kind of tapped into that connection. Now we face more frictions in the world. And even China has demographics issues, right? So now we've kind of ended that era. And now we're in an era where debts are still rising, interest rates are sideways to up. So there's no longer that offset. So government interest expenses, I think, are going to keep increasing at an alarming rate. And that's a source of new money creation. That's money that kind of pours into the economy. And so I think we're going to have to be ready for like higher average background levels of inflation. Maybe in a recession, it cools down a little bit, but then when we come out of the recession, it heats back up.
During her interview, Alden paints a scary scenario when higher levels of background inflation will become an everyday phenomenon for Americans just like it is today for Egyptians and Nigerians. According to renowned financial analysts, this grim future could be as close as 5 to 10 years. When it finally happens, Alden is certain that everyone, even the current naysayers, will have no choice but to transition to cryptocurrencies like Bitcoin. However, she adds that nation-states will not go down with a fight, and they will try several tactics to stop the transition, but nothing they try will work. She again gives the example of Nigeria, where the government cut off the crypto industry from being able to access banking services and even introduced a central bank digital currency, which woefully failed. Nigerians are still actively trading cryptocurrencies and even saving using stablecoins to protect their wealth. What are your thoughts on Lynn Alden's interview? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.